All right. Special episode alert.
Let's go.
Oh, this is going to be fun. We got old D. Guinn up in the hizzy.
Happy to be here to talk about some iOS.
Yeah.
It's a lot easier when you're talking to your friends and clients that we do business together, so it's going to be a fun one.
Little iOS state of the market. State of the union.
Update.
So, a little update. So, yeah, this is fun. We were just texting the other day, and you're like, hey, we should do this. I was like, yeah, like tomorrow.
Yeah. All right. So it's unscripted, so everybody forgive us, but there is a lot of random information out there and a lot of different things happening, and we try to keep our finger on the pulse and, stay in the game as much as we possibly can. And so I'm happy to be here, man. It's going to be great.
Yeah. No, it's a lot going on in the asset class too.
Mhm.
So, I don't know. We had a bunch of topics swirling around, but I mean,
we've got also for everybody listening to this, the NAIOS conference is coming up May 27th.
Yes.
28th at Gillies in Dallas. So a lot of the top investors, brokers from around the country are going to be coming, and it's going to be a lot of fun.
Yeah. Are you putting it on, or who's
if anybody went to Atlanta last year, they had the first one. It's a guy named Christopher Meyer who does different conferences for different asset classes. And then Tom Barbera, Nick Firth at IOV are kind of the secret sauce behind it. They kind of really put it on. They know everybody.
Yeah.
So they did that in Atlanta, and then they picked Dallas this year. And so
they'll jump around markets every year for it.
Yeah, they thought this was centrally located, and obviously Texas is the best, and Dallas, Texas is the best market in the country for iOS, so.
What was the one we all went to in Los Angeles then? Was that a different
It's a different one, the IMN conference. And it's funny, I think they're actually doing it in Dallas too, but it's like in the fall. So.
Well, it's because we're just the best.
Facts don't care about your feelings. Like Dallas is where it's at, so.
It's just data, people.
Well, what did you tell someone the other day? If you want to do investment banking, go to New York.
I said if you want to work in the movies, you go to Los Angeles.
Mm-hmm.
If you want to work in investment, if you want to be an investment banker, you go to New York City. If you want to work in fashion, you go to Milan.
Mm-hmm.
If you want to work in real estate, you come to Dallas.
Specifically industrial. Let's go.
Yeah.
I mean, isn't Dallas kind of the birthplace of industrial to a degree? I mean, Trammell Crow kind of
Roger Staubach.
Yeah.
Henry S. Miller.
Yeah. It's
Bob Lynn, Trammell Crow. It's like, look at all the companies that came out of that original tranche. So that's awesome, man.
So, well, let's where do you want to start? You want to start with capital? Like who's
Absolutely. That's the crazy part. And we were all talking just like offline. Mm-hmm. Jeremy and Matador Realty do a good job of paying attention to trends, and Jeremy's been brokering these deals, his whole life. That's like when I was at Mercer, you get a requirement for a 10,000 square foot building on 5 acres. You just crumple it up, throw it in the trash because it doesn't exist. And
right.
Institutional equity put an acronym on it. We were talking about there's 5 acronyms now. We're not sure what they all are.
Yeah, we're going to get to that.
But y'all got in, I would say, an excellent time here in Dallas and San Antonio and up and down 35. And now there's so many new entrants coming into the market. I would say one of the biggest, most recent entrants is Blackstone with Transport Properties out of Chicago.
Yeah.
Tim McCahill and Joe Farini, and they just hired Mike Burney from Dryport Capital to kind of head up Texas. And, they got $1 billion in equity and a mandate to spend $1 billion the first year and 5 by the first 3. And, which is pretty difficult to do in this space, $5 million at a time. But,
that's the thing is like what we're seeing guys that normally I don't think would be playing in a sandbox getting down and dirty now, where they used to just have to go buy an aggregation of a smaller operator to kind of get in and keep going. But now they'll do one-off deals.
Yeah. We bump into the big boys all the time, sub 5 million. That's always been our bread and butter.
Yeah.
Is 2 to 5.
Mm-hmm.
And we've transacted with you
2
to 5. That's kind of a hallmark. So we've been shocked. I'd say last 2 business quarters, it's been more.
Yeah.
More. Last 6 months or so.
It's a consistent theme. So,
and I think the more data that's out there for the larger exits, whether it's a recap or an outright like portfolio sale, like Altera, sold their portfolio to Peakstone. And I mean, that's a pretty crazy story. I'm going to try not to give away too much information, but I didn't do the deal, so I don't really care.
Yeah.
You know, like Parker Pearson, his daughter is in the same school class as the guy at Peakstone, and they knew each other, and they basically met up and started talking about it right before the conference we were at in Long Beach. And Altera, their big thing is like national credit tenants. So it was like 50 assets, probably 45 of them are national credit, 100% leased. And they closed that deal without running a call for offers, you know, submit by the second date. I mean, they closed that deal 45 days from LOI execution, you know, and
pretty strong.
Whoa.
How big was that? It was like
$495 million. And, you know, going in like 5.25 and stabilizing in the sevens, low sevens, mid sevens by like year 2. And, you know, you see different larger deals like that. And when you, like a Blackstone pays attention to that. And so now it was interesting. I was just talking with Justin Horowitz over at Cooper Horowitz, and who does a lot of the debt on that stuff. And it's, you know, new entrants, like other than guys with their own capital or like a Bricktop Capital who paired up with a big family office here in Texas. Like a lot of the groups are kind of married up now is what I've kind of seen. You know, you have the Angelo Gordon, Cerberus, JP Morgan, Blackstone, you know, et cetera. And finding the experienced operators that know what they're doing, you know, is getting harder and harder, you know. So a lot of the players are kind of in the game now, and maybe that's where the arbitrage slows down and, you know, deals become a little more streamlined. And
I noticed on the NAIOS flyer, I mean, Hillwood's sponsoring it.
Yeah.
I mean, they're getting in the game.
Well, you know, their first iOS deal ever, right?
Was the one up in North Fort Worth? Was that it?
Yeah.
Yeah.
And
so we all offered on that too, right?
I had an offer in 8 minutes after it hit the market at full price.
Yeah.
And then, you know, Hillwood, I mean, just their reputation, who they are. And I mean, when you get
it's
an
like
offer
the one
from
piece they don't own.
It legitimately was. It's the only piece on that street. The only
and they
parcel
built
didn't own.
multifamily across the street, and they have those CCR deed restrictions on them, any land that they've historically owned. And so I think maybe they started there and then they put it on the market, and then, you know, Hillwood bought it, and then Hillwood being Hillwood, you know, brought a tenant, Torque Automated Trucking Company at, I think it's like a going in like 14 cap now, you know, so Hillwood's going to Hillwood, but yeah, I mean,
Hillwood's going to Hillwood.
It's kind of hard to argue with that track record, but yeah, I mean, they're sponsoring the welcome party with us and IOV and Republic. And so, I've met with those guys and just kind of try to pick, because like talk about full supply chain knowledge of everything. I mean, just the relationships, the contacts, the stuff that they have, like the amount of land they have in Alliance that could be used for it. It's interesting, man.
Yeah.
I'm sure they can call any Fortune 100 company that's got a logistics vein and just immediately get the president on the phone.
Or they call them. You're like, hey, I have this requirement. Can you do this?
Yeah.
You know, so
that's true.
Yeah.
But their industrial team at Alliance is really impressive. You know, Reed Getz, Steve Aldrich, Jack Barkley, you know, Ian Kinney. But yeah.
So a lot. We have been deemed institutionally safe.
All right. They put a stamp on it. It's funny, but it's still not Class A industrial where it's just call Newmark, you know, East Still or CB, and here's all the data that anyone would possibly need, blind offer here, and then the deals work out.
Yeah.
You know, it's still.
But it's equivalent on cap rates. I mean, if that Peakstone deal was in the 5s, I mean, that's what a Class A distribution deal is going to trade.
I'm not going to say the name of the buyer, but the Triton portfolio down in Houston, pretty shocking number too.
Yeah, we heard about that. It was like, it caught our attention. One, who the buyer was, and two, what the cap rate was. We were like, oh my gosh.
So I talked to somebody pretty familiar with that deal that like was gonna bid on it. And it's funny when you actually look at the land bases, and the majority of it's land without buildings, it's $10 dirt.
Yeah.
So that's kind of, in my opinion,
and that was all in Houston?
Yeah.
Correct.
So you have no zoning issues?
Nope. That's true.
The
supply and demand. What is that?
We're not going to say who the buyer is, but we all know who it is, and they think typically usually go through operators.
Really?
Yeah. But they went on their own. So are you seeing people that maybe are getting into the space that typically may have been like looking for an operator, but are now just going to operate it, or are they still, or is, like you said, is every operator kind of paired up so that leaves a lot of people without a date to the dance and they just decide to go solo?
Well, like Stockbridge is a good example. Like they're kind of one of the OGs of iOS investments, like paired up with IOV originally. It was Patrick Hackett, Steve Azar, now at Ambient. You guys know well. And, so like Joe Dunn, Joey Deals is what everybody calls him. They buy deals direct sometimes. Nicola is another one. More West Coast stuff. But that's a good question. I mean, we don't get approached too much by the capital behind the paired up operators unless they really don't have like an exclusive and they just gave them like a tranche of capital to do X, Y, and Z.
Yeah, I just think it'd be interesting to look and see, are there typically profiled capital providers that don't have a girlfriend that are just saying, we don't need a girlfriend and we're going to just...
Peakstone. I mean, what a way to enter. Right?
Yeah.
Like
we're here.
Splash.
A lot of people were surprised. Like Altera is one of the best operators, like from start to finish, how they manage everything, like their tenant they literally from a portfolio wide, like meet with tenants nationwide and understand their requirements in certain markets and follow them around the country and buy assets based on what the tenants are driving in those markets. And, it was kind of surprising they didn't recap them. Right?
Yeah.
Like they just bought them. I was like, why would you not want to keep Altera in? But it's because they wanted to enter the space in a big way. And on the NAIOS panel coming up, it's the main guy at Peakstone is one of the guys speaking. So that'll be really interesting to listen to.
Yeah. Well, that's cool.
I talked to him at the California one, and they were like, whatever you got. I'm like, I guess, but you guys are a REIT.
Yeah.
Like, are you sure? Like, do you know what you're buying? It's just metal stuff. It's kind of junky.
Little did we know that term sheet.
They were like in the middle of the throes of it.
Yeah. No, that's what I mean. It's kind of always the joke. Like back in the day, you couldn't sell anybody a metal building that had the name Capital in their name. Like they just totally mandated against it. And it's crazy. There's still some guys locally that like there's one group that we both know that we talked to, and they're like, oh well, we can't buy any metal, and
good luck.
Like okay, great. Well, just go buy marketed deals because that's probably what you're going to get. I mean, that's
what I think with iOS. What these guys are paying attention to, like one of my buddies, a guy named Alex Geider at Zenith, so he's in charge of leasing all those, and like people have asked him, like, what's the difference? How do you know like when to pave a site as far as CapEx when you buy it? Like, do you pave it up front or you do crushed gravel? And like, it's two things. One, zoning is the hardest thing in iOS.
Yeah. So
what does the local municipality require? And then secondly, if you get like an equipment rental company or a, heavy like lumber laydown yard, something that's very heavy, and your site's concrete, unless you're willing to warrant that concrete and take care of it, like they don't want it. They want it busted up. They would want crushed gravel, whereas like a trucking company, if they're turning on asphalt in the middle of summer every day, like they're going to want heavy concrete. And so I think the tenant, like, it's the opposite of the famous Will Narduzzi quote right now. It's, I feel like with iOS, it's almost like basis is temporary, but yield is forever. It's
you flipped it.
I flipped it just a little bit because income's so important. And so I'd say that's really driving like the type of assets these people are kind of looking at, in terms of like metal buildings. Like we just sold a car dealership on 183, right? Yeah. I mean, it has a used car sales building in the front, but it's a 14,000 square foot shop in the back with 15 doors, and the doors were 10 feet, but the clear height's tall enough.
So you
underwrote, $10,000 a door, and to replace that tenant if they were ever to leave with check the zoning, make sure it's allowed by right, and then you change asset classes. And so,
well, let's talk about zoning for a minute, because that's always, I call that wading into the waters of having the city as your business partner. And,
It's a murky water.
It is. It's not. I kind of was hoping ChatGPT would get rid of city employees because it's like,
so nice.
Like, can you just read? Why don't we just read the document and do what it says? You know what I mean? But they, so I guess some of the original thesis of iOS is like they're never given the zoning again and all that stuff. But let's go back to your comment about crushed rock versus concrete. Like some municipalities are like, you're going to have to go straight to concrete. Like, and like, I think that's one nuance of this asset class that you need to understand each city that you're going into and what they're really going to require.
Yeah, absolutely. Understanding who, like a great example of this is like Grand Prairie is a tough market to get certificate of occupancies in for outside storage, unless you have like a service building and like the lot is only like a percentage, kind of like Louisville, like percentage of without a special use permit. But like Danny Glazier, Sam Schneider at Imperium, like they own the insurance auto auction yard in Grand Prairie. And I've had that listed for lease for a while and couldn't do truck parking. And so the way they approached the city was so smart. Like they found the city councilman, flew in on the Friday, 4th of July was on a Friday. He flew in on like a Thursday at 2:00, flew out at 6:00.
Yeah.
So he walked in, the city councilman was like, hey, I just left my family on vacation to fly down, meet with you. I'm leaving at 6 because this is so important to me. They offered to do certain things and then ended up getting support from the city for a rezone to basically 9-0 vote. I'd say, and that was off topic. I was just kind of shouting out to them for understanding how
totally on topic.
Industrial, like how it works within these cities. And like, if you go to an understanding too, like what I think with city municipalities is the staff assistant that answers the phone when you call them, they're more afraid. Like you have to show them that they're allowed to say yes.
Yeah.
Because they're more afraid to get caught. And so it's definitely the most important component, especially like pulling certificate of occupancies. Like it's not just zoning either. Is the site platted, right? Yeah. I mean, if you're going to make any changes to the site, get an electrical permit or anything like that, cities also, at least in Dallas-Fort Worth, I mean, what is there, like 126 different cities in quote-unquote DFW, and they each have their own future land use plans, their own, actual zoning code and permitted use charts, et cetera. I'd say cities are finally kind of catching up to what the asset class actually is instead of changing it mid-turn, right?
Yeah, we've been bumping into that. Like, that's why I think, like, you show, like, just talking about that Grand Prairie example, like, that's sometimes where it needs to get done is we're in person here, getting it done either within hours or after hours to really understand, like, what's the business plan here? Because cities don't want these things vacant, right? They don't
want them, period.
Oh, they don't, but the city, unfortunately, is becoming your business partner to execute these things.
Yeah. So you need to understand that nuance of it. So.
My summer intern, Will Vandermeer, shout out, who works here now, when he was here from A&M, that was his summer project. He had to present to all of us was a DFW iOS Bible. It's 32 cities, full zoning, write-up, understanding, permitted use charts, what's what. So now when we look at an asset in each city, we can go to those without having to get online and pull it. And then my next intern did a step-by-step for CO application, in each one of those cities. And so now David Bogle has that as a resource because leasing a site, if you actually care about the landlord that you lease it for once you receive your commission, if a broker's out of Tulsa and has never pulled a CO in Dallas before, like you need to help them.
Yeah.
Right. Just
get it done. Yeah.
Change of use and getting a site plan done. It's that. Like, that's why I think the best iOS operators have experience in industrial real estate prior to entering the space because they at least understand cities don't love trucks on the road and industrial in general. And so this is a little bit more specific, but understanding that is what qualifies your site,
Yeah, I think we might be over punitive, but I think we have a lot of battle scars internally from just doing the reps to lease something out. Because at the end of the day, what I say is if you don't have a tenant there paying rent, it's just a really nice, fancy Excel model built. It doesn't work.
Unlike, we won't say who bought it, but also like, I'd say though, on sites that may take a little bit longer to lease, when you look at if it's in the location that is right.
Yeah.
Like that one deal we were just talking about before we got on here, where it like didn't pencil at this price, and then a year later it sells for this price, and then it's just institutions show up. I think dots on a map are very important to these aggregators and what they're building, and a group coming in that doesn't have an asset in Austin may blow you guys out of the water from a yield standpoint, because long term, when they're going to get debt, they're Justin Horwitz, and they're trying to get it across 20 markets, having an asset in Austin, having an asset in Dallas. It's important. Yeah. So
totally. I mean,
it's
I also like, just from a zoning perspective, like we own a site in North Fort Worth on Bethlehem that you sold us. Like our capital partner loves that deal because of the heavy zoning.
Yeah.
It's like, where are you going to get the heaviest zoning that close in proximity to downtown Fort Worth and that close to I-35? So I think sometimes we're like, man, we're paying up to get that heavy designation. So,
because it is shrinking, right? It really is. Like, so that is, having the widest range of potential tenants you could go get is the best news ever.
Sure. We were looking at a deal in San Antonio, and the zoning was literally bifurcating the property.
Yeah.
Like on the front half of the property, it's like commercial zoning. On the back half of it's industrial.
Mm-hmm.
Like, they split the property right in half.
It's like Enterprise Truck Sales on 183.
Yeah.
Yeah.
Yep. MU3 in the back. What is that, business in the front, party in the back, or the other way around? It's my party in the front, business in the back.
Yeah. But no, I think the zoning thing is like really critical.
Yeah, I think you need to be pretty tuned into that stuff. So let's talk about what guys are looking to buy and what they're not buying. Like, I'd say late 2020, 2021, people were buying pure yards.
Yeah.
Is that still a theme?
I'd say, going back to that same comment about, I'd made the joke about, yield is forever and basis is temporary. It's income so important to these groups as they're starting to grow, as right? If you don't have a tenant, it's just numbers. So what I'd say that groups are shying away from is vacancy, unless there's a very easy to understand business plan as to how to fix this thing up. If you could find something, the design in a lab, the deal that every single person in the world is going to bid on is, call it a 25,000 square foot building on 5 acres with a 12-month WALT, and either no renewal options or fair market renewal options with a credit tenant in place.
Yeah.
So they can just have that cash in their model for a while, and then mark to market is in the eye of the beholder. But that's where they can get debt. That's, that cash flow. I see some bigger groups that already have deals in Dallas shying away from the vacant deals, but then on the lease deals, like, shocking me how low of a yield they'll get. Take. Yeah, because they understand what it takes to get up. So vacancy, like yard vacancy, is definitely, let's just get real. Like, leasing parking lots is tough.
Yeah. Well, let me ask you this, like, from a brokerage perspective, is that something
I've had to learn, like, really. And like, once you need to be friends with 3PL brokers, like, that manufacture 3PL, the trucking company, right? So it's like, if you can understand who's awarding what contract, like, for one listing that we have, like, Martin Grossman and I drove 10 distribution centers within a 3-mile radius of our listing. And we took videos of all the trailers in that lot with the name of their company and then the code at the end of it. And it's like, you can basically just put those companies in a sheet. And if it's one of the big boys like R&L or Saia or Southeastern Freight Lines that has a big terminal nearby, like, they're good. But how to find those truck parking type tenants is finding a group that is out of San Antonio or El Paso or Laredo or California or Arizona that doesn't have a presence. And you call them and you're like, hey, I drove this building, and this building. You had trailers at every single one of them. Where are you parking? We have this site around the corner.
Yeah, you need a drop lot, right? Where's your drop lot at currently? And can we help you?
And we have 24-hour security, and we have, and most of them are signing 3-year contracts at the most with, and they can lose those contracts. Right? What happens if they're trying to push costs back on the trucking company?
Yeah.
And they're like, no, you can't. Like, all right, well, we have this company that will take this contract. So they lose that contract. So if they sign a 5-year lease and they lose a contract in year 2, so you're seeing a lot of 12, 18 month, Amazon just inked a big deal on 1301 Winter. Oh, I told them I was going to give wrong addresses, but whatever. 1301 Wintergreen, 11 acres just for pure drop trailer parking. And it was like $7,750 an acre.
What was the composition of the yard?
Concrete.
All concrete.
And they spec built it. So
spec built it.
Yeah. Shout out.
Who's
Mike
the owner?
Burney.
Who's the owner?
Mike Burney, Triport Capital.
Okay.
Yeah.
Well, we got one too.
Yeah.
Jalma Freeway.
Well, Amazon in particular, let's talk about that. Their process is so hard to get through. With all the different departments that have to sign off on X, Y, and Z.
There's probably people meeting each other for the first time at Amazon all day.
Well, we're working on a deal with them in, let's say, Canada right now, or North Dakota. I just don't want to give the address. And they gave us an RFP. We responded. And then they wanted us to get a land use statement from this municipality saying their use is going to be approved. And so they put together a site plan, and it has a 10,000-foot building and an 8-acre yard. And then in their site plan, they had to do a phase 1 before they could submit the RFP. Okay. And that took forever. They asked for a concrete pad to store heavy equipment. They asked for an outdoor restroom and a modular office. And when we got it, we were like, and then in the zoning code, it says service, heavy service and storage is allowed by right. And there's a 10,000-foot building with 3 oversized grade level doors, an office, a reinforced concrete pad, and restrooms. And so we go to Amazon, we're like, hey, y'all put together a site plan of everything besides the building, and you're asking us to build these things. The zoning is not that clear if you're not using the building. So can you update your site plan to show using the building? Well, then they had to go get a new phase 1 on just the building.
Oh,
it took 4 weeks to get the site plan included for just the building. And then you get there. So if you're a landlord and you've gone through it with them before and you know how that process works, Amazon's going to be more likely to pay more to come with you so they can get a deal done quicker.
Yeah.
And get a store open. Right. And so it's understanding what these tenants need and what the zoning needs and different things like that. That's how the most successful iOS national groups like Altera, Zenith, all these guys are moving around, because those guys are going to call the landlord in that market and be like, hey, Mike Burney, you did 3 deals for us down in Houston. We've got this requirement up here. He's like, oh yeah, I've got this land over here. And here's your site plan with 3 feet between the trucking aisles, because you have to walk through every day, twice a day, and do inventory checks. So I've already spaced that out for you. And then here's the lighting specs that you need. And here's the concrete grade, et cetera, et cetera.
Yeah, no, so Amazon using a lot like this, what are they, they typically, their distribution centers have a very oversized parking lot, but what's the need for these trailer lots for them?
I can speak to the one that we're doing, the one in North Dakota.
Yep.
I don't know about the comp I just gave.
Yeah.
For us, the one we're doing is a middle mile service facility. So last mile is one of their smaller distribution centers close to their end consumer. Greenfield is their big bombers. So I don't know about the parking associated with the big bombers.
Yeah.
But the middle mile is obviously, let's use common sense. It's somewhere in the middle where their trailers can come and get serviced and stored and sent out to different downstream people. Yeah. Right. So,
so it's really a service center. They're just servicing
the one I'm
equipment.
doing is a service center, but the one that they signed down there is no building, 3-year deal, great rate.
Yeah.
Pure parking. So
yeah, that's a great rate.
Yeah.
Yeah. It's pretty phenomenal, but that's so, okay. So back to what vacancy is probably one of the things that these groups are shying away from. And so if you're buying a parking lot, how do you accurately underwrite vacancy timelines,
especially because they're all shorter term leases.
Exactly.
Yeah.
You know, and so unless you have, now what's interesting too, we should talk about is groups that are spec building these things.
Yeah.
You know, and so maybe they're looking at it from a land basis standpoint and saying, hey, we're going to do this, but it's definitely slowed. That part has always been slow for me.
Yeah.
You know, it's always the existing, like if you go to these iOS conferences, I'm hoping that NAIOS and the content that's talked about is more than you got to have a building.
Yeah.
With grade level doors. It's got to be zoned appropriately now.
Yeah.
You know, it's like, okay, we do know that.
Yeah.
You know who that sounds like?
Who?
Me.
That guy.
Yeah, it's like let's dive in a little bit more because it's like a $450 billion asset class and it's growing like crazy.
Yeah.
And so how do these things play out in real time? How do you know, guys that were entrepreneurial and bought the right sites and the right locations and they're looking now, what's the next step and who's doing what? How do you keep growing? How do you compete with?
Well, that's what, you know, to a degree, some concern of our business model is like, how do we keep growing this? You know, because we've got to, you know, and, you know, we're working on probably what's going to be our first development site right now on a, I call it a piece of land, but it has some buildings on it, but we are going to be we're negotiating a build to suit with one group right now, but we're full steam ahead to spec build a shop on it, you know?
Yeah. And I mean, we talked about this offline, but y'all got in early.
Yeah.
And you have the right basis and you own and you have a great in-house management team and leasing, you know how to lease properties because all of you guys have been through it.
Yeah.
Maybe it's not buying, you know, 30 deals of these a year because now all these big boys are in it. But the assets you already have, adding to the right ones and figuring out what they want on an exit so you can strategically, you know.
Yeah, I think you're absolutely right. I think we are, you know, in the beginning of the year, we had a goal up here to buy this much. And after our first quarter, we went.
We sized it down.
We sized it down significantly. Huge. And we just said, hey, let's just wait for the right deal and not just go buy deals.
Well, and let's talk about too, I was thinking like, how do you source the things? You know, like that's my favorite. It's my favorite part of my job is literally getting a list of properties from a client. Say, we'll buy any of these. Like just, you know, go bird dog and see what kicks up. And then it's just like the confidence of approaching an owner, a family that's owned, you know, a trucking company or truck repair company, and they just sold their business to private equity.
Yeah.
Right. And then they kept the real estate, but the lease is all screwed up. Yeah. Like, how do you help that family? But also like, you know, and so I'd say just y'all's, you know, buyers, brokers are needed. I mean, there are some buyers that call direct, which is, you know, which is fine. But brokers, at least me, I always show my best deals to the guys that I talk to every day, that I'm sharing information with back and forth, and know they'll execute. And like you guys and, you know, the Cantex of the world and the guys that understand that are going to get the good, like kick-ass deals. But you're not going to be the guy that, you know, gets the one that's 4 other offers and it's blind to resubmit, that kind of stuff.
Yeah.
Well, I mean, in all fairness, we're not capitalized to pay for one of those either. So you have to profile the buyer of a deal too. And you're like, I know this will trade at this. And there's, you know, we've talked to some of the larger capital providers that are looking for operators and what they need to hit. Like, I'm like, we could buy so much more if we had that structure, right? I mean, like, you know.
Back that truck up. Dump it.
Yeah.
The trucks are there.
Yeah, I know. But I mean, like.
But then you're dealing with going to them for approval and.
Oh, yeah. It's a totally different. It's totally different than the way we're structured now. And then, too, at that point, like, you know, how much are we putting in? Like, non-recourse debt. Like.
I you know, we've done an institutional partnership before and it went well because the deal was tremendous. And
I know what deal that was.
Yeah.
Thank you, Guinn.
Thank you, D. Guinn.
Shout out Jeff and Todd Hubbard too.
Yeah. But you know, there's just a lot of probing all the time. And necessarily we get it, you know, but it's just like, can we do less deals that are just as good of quality, capitalize them with less intrusive thoughts all the time?
Yeah.
Have a bigger slice of the pie because you know it's probably the most liquid, y'all are sitting on the most liquid asset out there, because if groups have mandates to spend $1 billion in the first year, how are you going to do that? It's portfolios.
So
versus our current capital structure, who you know our capital partner, but I mean, it's, hey, we're going to do this. All right, man, sounds good. That's like,
because he's an existing operator, like in that type of space. Richest guys I've ever met are in the concrete business.
And so they get it, and it's a certain level of comfort. And we're like, hey, if we only do a deal a quarter, that's good, high quality, we're the bellies are full here. And so there's
Shallow Bay is like roaring as well right now, right? I mean, from institutions. So
we had a theme around here where I was like, I don't want any more of this stuff because it's a pain in the ass. It's a massive pain in the ass. I will say we have an iOS tenant right now, though. The man, golly, I could fight him if I.
You caught them in them streets.
But a lot of the stories were gone, right? A lot of the
100%.
As Will likes to say, the apartment and storage bros all got into it. But I mean, that to be said, we just probably put our second largest transaction of all time in title yesterday. That's Small Bay. But it was a hell of a story.
And they're very similar fundamentally, and the types of tenants you're kind of dealing with and how to navigate,
It's you got to know what you're signing up for in both asset classes. If you don't know, it's going to be an uphill slug, and it's going to show on the returns and physical attributes of what the property looks like. So,
well, we touched on this before we started, but some themes we've talked to the users of space on was they want to just start owning their sites.
Yep.
Are you seeing any of that? I mean, some people's business model is always just a lease. But
I think we were talking about interesting, where groups that are, like you just mentioned, that their business model is aggregating more companies and continuing to grow. So they keep their cash available for that. And so like United Rentals is a perfect example. Right? Like they just won the hostile takeover with Beacon, and
wait, what? What is this?
Beacon Roof and Supply.
Oh, they bought Beacon?
Yeah.
Wow, I didn't realize that.
It's like CXPO, I think. I remember that book, How to Make a Few Billion Dollars, Brad Jacobs. Yeah. That was pretty crazy. But so groups that their business model is to rent, like mostly Amazon and, stuff like that. Like understanding when you buy a site, because I agree, these users, I approach them every day and I'm like, hey, you bought the building for $500,000 and here's $4.5 million and you can lease back for, what's your revenue? And we can sign a lease for 10 years at less than 5% of your, revenue. Does that make sense for you? And then it's like, well, I don't control my own destiny, and paying attention. I feel like users also know how hard it is to find these motherfuckers. In terms of how did they source it in the first place? Did they build it? Did they buy it off somebody else? And so if a truck, using trucking as an example, we were talking about it, if manufacturer, distributor, trucking company, so if a trucking company has a contract with the distributor and they have two customers in a given area, they'll lease. Right? Because it's not worth it for them to spend that working capital to own something long term.
Yeah.
But if they have 10 customers in one submarket, and that way if they lose one contract, they're not stuck, right? They have enough risk averted, they'll buy, you know? But also I think the prices, it'd be interesting to pay attention to that theory, because historically, pay attention to the YTC, the yellow, and then Old Dominion buying that site on Walt Walker and next to Lindemood, they paid $25 million for it. They put 13 into it. They have so much capital to buy, but it's now that the people that literally control the world in terms of economics are entering this space that have unlimited money.
Yeah.
It's eventually kind of like Class B, in Brook Hollow in 2017, 2018, 2019, eventually are they going to not have enough ammo to compete with these guys, and they'll have to shift to rent.
Yeah.
But I think buying the asset, like the type of asset that you choose to purchase, understanding who's going to end up coming to take it.
Yeah.
Like it's an art, it's not a science, but it's a very important discussion conversation because I know you guys talk to companies all the time. They're like, yeah, we want to own. We want to own. We don't want to rent.
Yeah.
We've had two. One was adjacent to a site. One was a perfect, but explicitly two big corporations that you've probably interacted with. They're like, no, we're mandated to buy now. We're not going to lease.
Yeah.
But,
well, I guess at the end of the day, it's all business plan specific, right?
Yeah.
Like, and
what is their working capital used for?
Yeah.
Right. Like ABC Supply or those guys.
Well, it's like, something, this was always something I was, you call on, not an iOS tenant, but when I was calling on tenants in a building, you meet the owner entrepreneur and he's like, man, I want to buy a building. I'm like, okay, well, why do you want to buy a building? Well, because I want to own real estate. Okay, well, maybe you need to think of, I go, have you calculated what your inventory turns are? And like, what's your gross margin on your inventory turns? So do you need to buy a building or do you need a bigger building? If you had a bigger building that you leased, could you turn more inventory? If you turn that inventory, how do you get your inventory turns from 5 to 12? Like if there's a way to do that, or you shorten the footprint and turn your inventory more, If you're making 20 to 30% rip every time you turn your inventory, you do that 10 times a year. Well, maybe you need to be doing that instead of owning real estate. So maybe that's a lot of what these guys considers, whatever their business is like, can I turn this? I can turn whatever it is, equipment, right? I can turn this equipment out on rental so much. Having more yard space just a lease per month versus what the equipment I can service out of that yard space and turning that every month is probably more profitable than owning this piece of dirt.
I always tell the guys on my team, it's paying attention to what people say and learning, because if you're asking the right questions to these people, they're going to talk to you. And if you can provide solutions through experience and talking, like owning your own company, so you understand these kind of things, it makes you more dangerous as a broker to kind of speak towards that demand.
Yeah.
So I agree completely. Like it's something to pay attention to. And I wish there was, I think these conversations and getting the content out there and interacting with other people, like the relationships within iOS are fantastic, like the people that are in it.
Yeah.
And just gaining as much info as you can to be dangerous, making your own informed decisions is the name of the game, right? Because that's totally true.
Yeah.
You see groups going broke buying their own real estate, you know what I mean? And then now,
Yeah, we've come into smaller operators, owner operators, where the last, call it 2 of the last 10-ish inquiries for our credit fund have been owner operators buying too much real estate.
Mm-hmm.
Yeah.
And they're just like, I need cash. And then our thing that, what I learned from Jeremy is when a guy shows up at your door with $1 million request, he don't need $1 million. He needs 2.
Yeah.
Mm-hmm.
And then we start kind of digging in. You're like, man, you got in the real estate business, you really didn't understand what you were getting into. You should have been leasing.
Yeah.
Well, that's also,
now you're just leveraged up.
And understanding how to provide, because there's so much capital out there, which company has the right capital stack to provide the best innovative capital solution for that company?
Yeah.
If you can understand that as a broker and how to pair the right person with the right person, or you guys having that exposure to operating companies and things like that,
It's pretty deadly.
It is.
Yeah.
Well, I don't think we touched too much on it, but you and I just pulled something. We're cooking something like that right now.
Let's go. And we got something bigger too.
Yeah. So that to be continued.
TBD.
Yeah. But no, I think being able to really understand. Well, that goes down to pure, really good brokerage, right? Like really being able to understand the need and like being able to ask the questions that pull out the need that the business owner can't always articulate to you if you can't get it out of them, Yep. And I think that's just.
Well, and it also, let's keep going. Understanding that from the operating company, like when you're underwriting an investment, also will help you identify, I'm buying this 2-year Walt, good credit tenant.
Yeah.
What can I push them to before they leave?
Yeah.
So if you can understand that as much as you can, I mean, overall, just like I mentioned that in Dallas, it's, new players coming into the market, compressing yields a little bit.
Yeah.
But at the same time, the tailwinds of DFW are so strong, just vacancy for iOS is, I'd say, pretty small. You really have to break out the classifications of which, like, you really need to get nerdy. Like, you need to say, okay, terminals are doing this, drop yards are doing this, service facilities are doing this, and then significant dock-eye buildings with significant outside storage are doing this. It's like, can you pay attention to those subsets because they're so different because all the companies are different.
Well, so that's a really good point. We just terminated a deal yesterday, and it was a building on 7 acres, 7.9 acres, and it had a 20,000 foot building on it. The building didn't know what it wanted to be when it grew up.
Yep.
So it had a dock high door, two dock high doors, and then it had a grade level door, but nothing was truly a drive-through door. And it wasn't truly a dock high distribution facility with a lot of yard. And I don't know, man, there was significant other things that made us drop the property, but that was one thing that just kind of made me go, man, leasing could be a challenge, right? Because the guy that shows up in each shop, well, this doesn't truly work as a shop. It's got some imperfections there, and it doesn't really truly work as a distribution center either. And so, so to your point, I think understanding the sub food groups of the overall is and how they're really moving is a challenge.
Yeah, 100%, man, for sure.
When you say the vacancy's low, like, that's the thing that Jeremy and I kind of get hung up on is, like, is it low? Because the data is still kind of, we rely on people like you and all the markets we operate of that kind of give us that feeling of, and that we hate to operate from a position of feeling, right? So it's not a good recipe.
Well, it's get specific on what types of deals are low. And then when you get comps, like, I try to pay attention to, okay, who's the tenant rep broker on that? And how quickly did it lease? Try and call the tenant rep broker and throw him a favor. Right? Hey, Riley, like, you just brought a tenant over here. What was driving the need for that tenant? Do they have a lease coming up? Did they sign a new contract that said they need to be in this certain area for this certain store? They paid this. Why did they pay this? It seems like it's a little bit below market. Like, why did the landlord do this? Understanding, like, anything in Irving, Loop 12, Harry Hines, Irving Boulevard, like that pocket, things are just moving very, very quickly. Like, let's give an example and say it's 4879 Oakdale Road, right? Triton owns a great asset. It's like 22 acres. And we had I was the leasing agent with Martin Grossman, and, we were going to split. They had a right to downsize the existing tenant from 20 acres to the back half. And they had a 14,000 foot building that, it was a shop, and then it was like 10.74 acres. And you underwrite 9 months to 12 months vacancy on that because bigger check sizes sometimes are harder to find. But we found a group that we'd already done a lease with, like 8 months prior, same tenant rep broker, same guys. And they're storing generators and transformers and, they have MSA as the biggest data center developers in Dallas. And so they start making money the day the lease is signed, and they can move stuff in there. So we had that precedent, got that leased in like 2.5 months at a good rate. 4988 Walton Walker, a deal that just sold, where it hit the market and there were like 13 offers. The guy that bought it, a lot of people told me they thought he overpaid. 18,219 square feet on 2.04 acres. And it just leased for like $34,500 a month with, 3.5% bumps on a 5-year lease with a good credit tenant. And if you run the price per acre, it's like $17,000. If you run the price per square foot to the building, it's like $22 a foot to the building. And so, I don't know the exact answer, but it's like certain deals in Fort Worth are leasing, certain deals in Fort Worth are not leasing. We have the Riverside stuff over there. We just did brand new construction. Those guys are fantastic. We're knock on wood, about to get our first lease signed on one of those assets. And then, so
the pricing is so.
That's why you got to get specific.
It's kind of like kind of like this sometimes.
I think like for stuff it's like building, like the one that you described on Loop 12 and the one that we own on Loop 12, call it 10 to 20,000 feet on 2 to 3 acres. We've kind of got a number in our head now where from a gross lease perspective consideration.
Like total check size.
Yeah, total monthly nut for said operators, like call it 30,000 a month. Like we're like, if we kind of get to that number,
that's leasable.
That's leasable.
Yeah.
Most groups, national credit or mid-market or whatever your definition is, they probably can stomach that if they need to have the first shop, second shop, maybe the third shop in the FW.
Yep. Jeff gave this to you for term of the week, which we got to use it at some point. We have a list going, but you're on there for chunk rent.
Oh, let's go.
Yeah.
I had that same conversation with Luke Davis like a couple months ago about this building on Roy Orr, and I called him and asked him what he thought he would rent it for. And I was like, I don't know, man. It's 21,000 feet, 2 acres. Like, I think it's somewhere around, 33 to 35,000 a month. He's like, well, the price per square foot, that's ridiculous. And I was like, chunk rent.
Yeah.
And what it is I learned that from Altera. Like, tenants are paying $35,000 a month for a 1 acre or a half acre in a building in the Inland Empire, or they're paying $35,000 a month for 10 acres in, I don't know, wherever. So when they come to Dallas, that business model typically kind of works. And so as long as it fits the functionality requirements that you have, but also the only thing I'd add on to that is what I've learned also about higher coverage sites. So 18,000 feet, 2 acres, the building price per square foot matters.
Yeah.
So it's kind of in that 22 to, I've seen it get up to like Altera leased the deal, 7050 Jack Newell, or 7088 Jack Newell. They bought it from Todd. Right. And they're like the mayor of that street. They own everything over there. It's like 15,800 square feet, 3.5 acres. Easy weld.
Yeah.
Came in 33,000 a month, triple net. High price per acre is $28 a foot to the building.
Yeah. And, we tried to pencil that deal and we couldn't make sense of trying to buy it.
Yeah.
And, but sounds like it worked out.
Yeah. And then the other one that you referenced on Loop 12 too, we got really aggressive because we owned something 6 parcels down, and it hit the market. Young Dylan in our office was like, well, did you check your CoStar alerts? I'm like, dude, I got all these kids. Like, what happened? He's like, we got an offer. So we offered, and we got really aggressive on it. I think I know the number that I traded for. We weren't that far off.
3.9, yeah.
Yeah, we were like within couple, maybe no more than $200,000, maybe within 100.
Mm-hmm.
And we just couldn't, we were blown away by the pricing. And you didn't see it all the way through. I'm like, dude, this is going to be tough.
Okay.
But
what's funny is, let me give you, I won't say the name of who bought it, but we were on the David Beeson Loop 12 train from the very get-go.
Yeah.
It took me 8 months just to get the guy, and you were there from day one, and we were increasing, meeting with him, doing all this stuff. So by the time that, he actually hired me to list it, and I put a sign out there, obviously got a lot of calls, and the group that was actually had kept pushing behind you guys, even ended up with like a higher number, but David, God bless him, he was like, no, Jeremy's been here and this is a good deal for me and let's do it.
Yeah.
They're the group that bought the deal across the street.
Yeah.
So they were so pissed they missed that deal.
Yeah.
They got aggressive. I know that guy. He has a gift of when a tenant walks in to his building and he gets to meet them, he's fantastic at getting a deal done.
Yeah. You have that gift.
Jeremy
too.
has that gift. Romy has that gift. Guys that have leased buildings all across all different product types. It's like, let's take the kink out of the hose. What is important here? How can I take things off your plate? How can I get your CO? I tell tenant brokers all the time, you bring a tenant to my site. Here's the permitted use chart. Here's your CO application. Tell me what you need. I cannot wait to pay you. I genuinely what's your Venmo? I cannot wait to pay you. and just try and make it easy for them. And, it works sometimes doesn't work. But yeah, I mean, so all that kind of came back to vacancy and us just round table being like,
yeah.
But I think there is like Sherlock Holmes, like he's like playing the violin and he's like, look at all these mosquitoes flying in this direction when I play this note or flying this note, so it's like, can you take the data that's available and use it to your advantage and pair the right people with the right people? I would say that the coverage of the site matters. So you're underwriting more price per acre, or you're underwriting more of kind of a total check price per square foot to the building.
What, so, you kind of listed off 4 food groups there. You've got pure lot, drop yard, you've got terminal, you've got maintenance facility, and you've got a true dock high distribution building, but with a land component.
Yeah.
Out of all those, obviously drop lot's probably not one, but what of those 3, of those food groups, what do you see the most tenant velocity on?
Well, on the ABC Supply, Beacon Roofing, 84 Lumber, like those are where core funds are naturally gravitating towards, in my personal opinion, because they're the easiest to underwrite in terms of replacement cost. Because if someone buys 15 acres or 10 acres, for example, they're not going to build an 80,000 square foot building and spec pave the rest of it, and there's such a lack of supply of those deals, and the credit is so good. Like, talk about tariffs, and like domestic tenants are getting more love from debt. So it's like, if you have people stockpiling inventory and storing, there isn't enough supply, in my opinion, for that. Like, those deals lease very quickly. And
so an ABC supplies a 80,000 foot building with a 5 acre yard or something?
Yeah, there's one on I think it's 7600 Scott Street in like White Settlement.
Yeah.
And it's this guy that I called, and he lives in California. He's like real estate investor, golfs all the time, and called him, and I was like, hey, like, I have someone that will grossly overpay you for this. And he was like, well, you talk about owning shallow bay Class B, like, sometimes it's a pain in the ass. Like, this is my favorite deal of all time, because they literally just pay. I just walk to my mailbox every month and I pay it. I offered him it's like 7 years left. I think I offered him like a 4.2 cap, ish.
I think we'd.
But
I think he bought that thing in the low 5s.
So he's chilling on an 8% bond right now. Like, why?
Yeah.
What are you gonna? And so institutions are really, really, really aggressive on those. Tenant velocity is definitely what you just talked about from an investment standpoint. You guys pay attention to globally, which is total check, chunk rent, term of the week.
Chunk.
Like, that matters for what types of sites that people are ending up going for. So it's like, if you're like institutions competing with y'all on sub $5 million deals, it's because they're seeing that same data, and they're seeing tenants leasing quicker for the $22,000 a month functional service facility on a couple acres than the site that's 15 acres that, you're upwards of, like, Altera just bought the Arnold Transport site in Grand Prairie. 3375 High Prairie. Caleb McCoy did that deal with Trapper Graph, and now Caleb and Bo have that out for market, for lease, and it's $115,000 a month. They'll get it.
What's the specs on the property? They'll get it. What's the specs on the property?
11 and a half acres of concrete, 3 buildings. Don't quote me on this. 3 buildings, I believe, around 35,000 feet, and they have the ability to expand like an additional X acres.
Are they all shop space, or is there
office and shop and
no dock high, pure grade level stuff?
You're quizzing me, brother. I don't want to misspeak. Arnold Transport was a large, trucking, so it was set up for that type of use. And so there are tenants that show up with like $100,000, budgets looking for something functional, like HT Building Products on Irving Boulevard. They came to Valley View and asked us to build another shop for them, and then they went and leased from Southeastern Freight Lines, over there. I think they'll get it. Ambient just bought the Austin Industries
terminal
deal on Union Bower. Yeah. So we went live, shout out, hit the market yesterday. It's 8.34 acres, 42 door cross dock. And like, it's not Class A office, but Austin is an incredible company.
Yeah.
So this is where they operated. And so the office is like 4,000 feet, very nice. And then there's 2 shop buildings with like 11 oversized doors. And, you know, we're going to be $85,000 a month on the ask.
What's that per door?
What's funny, Chris Wong and I are co-leasing that together, and we've talked about how we quote it, because it's not just a terminal, it's not just a service facility, it's not just a price per acre.
Yeah.
Part of it is blending those 3 together in the realm of a belief system to whoever shows up.
Yeah.
You understand what I mean? Like, someone shows up looking for a terminal, you don't want your terminal quoted door price to be like $2,400 a door, because they're going to walk out of them. But if you walk up and say, hey, it's $30 a square foot to the building, and you get 8.34 acres and a cross dock and these shops in this office.
Or you give them a chunk rent.
Chunk rent.
Hey, that's how we leased that deal for Triton.
Yeah.
Honestly, from a messaging standpoint, we, instead of quoting a price per acre or a net rent and then telling the broker what the OpEx is so the analyst at Stream can get the equation wrong and put it on the spreadsheet, we would literally, no offense, you know, but to me, I got permission from Triton to lower,
call those guys stormtroopers,
lower the quoted rate by like $1,300, so that way we could quote a flat $80,000.
Yeah.
You know?
Yeah.
And so OpEx plus this, that's what we did. And so,
I think that's a big thing we're looking at now is when I look at a site, I just kind of have to like gut check, is the tenant going to pay this much gross per month? And
the chunk rent is a really big theme in our office right now.
Yeah.
Let's go, baby.
Yeah.
Well, and it's funny, Dallas, and I think kind of the market makers, I call all of you guys in the iOS world market makers, because that's what you're doing. What you just described on this deal that Ambient's got out, you're creating a market. It's similar to like the financial markets where guys are like, hey, I'm packaging these things up and I'm going to sell it to this pension fund.
Synthetic CDOs.
Yes, exactly. They're market makers, and you're making a market. And it's funny, when we go and buy south of DFW, they always ask us like, what are those dudes doing up there for the messaging? Because the messaging is everything.
Yep.
And I think for not less complex markets and less complex tenants, but I don't know how to describe it anyway, but where we're up here seeing so much velocity in different terms and creating different, messaging, chunk rent is a very digestible thing because the price per foot sometimes on the building, it's eye-watering when you're talking to the local guy in San Antonio. He's like, $28 a foot. What's wrong with you, son? You're like, well, it's $30,000 a month. And they're like, oh, okay, that's actually more in line. Because to your point, fact-finding questions.
Yeah.
What's the use? And you start peeling it all out. So
like why the hell does it matter what the price per square foot to the building is?
Who gives a shit?
How many of them are there? What's your budget?
Yeah.
What can you really make work? And what are you paying in Phoenix?
Yeah.
Yeah.
For the same thing. And you're
paying $60,000 a month.
And you run demographics, and you run where you're like the labor and the tax incentives and all these different things. And it's like, you want a location DFW, it's figuring out, I agree. Like, it's just like we used to do with modified gross. It's like, hey, landlord, this tenant, they're scared of not knowing what these things are going to be. So guess what? For the first year, it's going to be this number.
Yeah.
And then if there's a difference in taxes and insurance, we just bill it back.
Yeah.
So there's a little bit of that. I mean, there's no exact way to do it, but that's what we've found is like what you said, the messaging is very important. And, paying attention to meet those chunk rents too on like, what are my taxes and insurance and all that shit going to be, So, but it's a fun space, man. I hope to come on here and be a beacon of hope and encouragement that the entrants coming in, all these big capital partners and what they're paying on some of these bidded deals, like they are paying that because they don't have the deal flow. Yeah. They don't have the information, and the information is out there and the relationships are out there to go be made.
Yeah.
Where once the bigger deals keep happening, it just makes the existing portfolios that everyone has like even more valuable.
Yeah.
And buying sites with income, I mean, you know, like that's the gold standard. Like, I am curious to see who shows up with a fund that allows them to go do deals with the groups with 8-year lease. You know, like who has the cheapest cost of capital?
Yeah, that's a good point.
Who has the cheapest cost of capital available, right? Because Jeremy literally taught me what financials and how to underwrite things. So it's like, I love the yield on cost equation. That's what I use all the time.
Yeah.
But IRR and cash on cash is actually what matters to LP investors that invest with you. So it's like, can you buy a deal that's 100,000 feet on 15 acres of concrete at a 4 for 8 years, but they're paying you like, call it 30 grand a month. They're paying you $3 a square foot.
Yeah.
And it's like the mark to market at the end of it is a 5-bagger, but that IRR,
totally blown out.
but the IRR to get there, you know, so.
Well, that's what, I mean, we've seen several deals that we're just like, man, God, I love this real estate, but I can't stomach that for that long. I can't math the math, you know?
We have one in title right now, and you're just like, oh God, man, like how are we gonna make this work? And
we went on that one. We went straight to the tenant and said, "Here's a dollar amount."
GTFO, or we restructure.
Can we go make improvements to your site on our own dime just to get some bumps in there?
Can we find a way to default you?
Or can you underwrite? Like how low are cap rates going? Like, can you just eat it for 3 years with some bumps and then watch replacement costs keep going up and then sell it with a 4-year walt instead of a, 7? But
we've been very attracted to the, hey, current tenant is paying 10,000 net, market's probably 18 to 22.
Mm-hmm.
And if it's 4 years out, that's kind of the max. But
what yield is the lowest that y'all? I'm literally asking from because I invest with you guys too. So it's like if it's a 4-year walt, right? That means you're waiting. What's the lowest?
It starts to get very thin.
What's the lowest yield you can do? Like,
we've looked at deals where it's zero cash on cash for 2 to 3 years.
Yeah,
because we're like, the basis is good enough. The underlying real estate's really great. But it's like you got to be touching it. We've looked at them.
Capitalizing it could be a different story.
Yeah, we haven't pulled it off.
Well, who has the cheapest cost of capital to go do that?
Well, I mean, we are hearing groups are stabilizing the 7s in year 3.
Yeah, I'd say everybody in the world, their models are all very similar.
Yeah.
I mean, if it's
except ours.
Because y'all's yields are way higher.
Yeah.
It's a good thing. That's why.
No, it is. It's
all the brokers that give you deals put in with your deals. I mean, how many deals do me, Rich, and Todd, are in with y'all?
That's Rich's wife.
Summit.
Rich's wife is like best buddies with Bella because she's like, okay, like we have another one now, and you're like, oh, thank you.
Yeah, but they're all generally, if it's a development deal, it's higher. But I would say that the data that's out there for the exits is great because then if it's a quality asset, they're able to kind of stabilize like 7.25, kind of get down there, maybe a 7. Like, I mean, if it's like a unbelievable asset at a good basis, it's not an exact science, but most of them are trying to get to an 8.
Yeah.
So when I underwrite a site and I'm talking to a property owner, a lot of times I'm literally just saying, okay, 3-year lease back, going in X, then the mark to market with this commission, this CapEx. I'm trying to get to like broker math and 8.5 because my broker math is always 75 basis points to 100 off.
Yeah, we've talked about that. Yeah.
And so just to intelligently be able to pick up the phone and be like, dude, this is a deal I think you guys would like. And you give me an offer in 45 minutes unless I completely whiff something.
Yeah. Well, and so that's good that you know that because that's something, I want to make sure everyone understands what you just said because a lot of brokers bring us deal and they're like, oh, this is an 8 cap. And you're like, well, no, it's not because we have to get to that 8 cap. And it's, you adding those basis points on top of it, this is where it really needs to be because there's costs associated with doing these things.
Yeah, 100%, man.
And generally, you're right, David. It's about 50 to 100 basis points. And so for us, we're trying to year 3, if it's in DFW, if we can get to an 8.5 yield on cost, we're pretty green lit.
And that's where the conflict is happening because these guys with cheaper cost of capital are able to get a little bit lower right now, but that doesn't mean the deals aren't out there like to get to 14s, No. God bless High Life, Texas, right?
Yeah.
Yeah. No, it's the truth. It's just, it gets tough.
Well, okay. Is there anything trend-wise you see in iOS that we haven't kind of covered today?
Let's see. I would say that for guys that are asking the question, and this is just my opinion, disclaimer, okay?
Deep thoughts.
I just bought, I bought a site, regional plus credit. I just inked a 5-year lease.
Yep.
What's that worth? Right?
Yeah.
And I'd say depending on the check size, these guys can get a little bit more aggressive on a going in yield for a bigger check.
Yeah.
But if you had a deal that just leased for 2 deals, like within the last 4 months, one in Garland and one in Fort Worth, they each leased for $15,000. And then you signed a new lease on another deal for $35,000. And combined between the deals, let's say you paid, I don't know, $2.5 million, and then on the other one you paid $4 million. So you're in it for $6 million. So say it's 30 plus 15 plus 15, so it's $60,000. That site is probably worth $12 million. It's like somewhere like that low 6.25 range is where, if it's big enough, I think these guys would jump because they're all chasing income, right? It's easier to finance. They're doing the Stone Lake, MTG, Cantex, Brook Hollow 2017 model of aggregate, compress yields. Maybe Will can always fact check me because brokers don't understand the, interest rates where they're at, like where these buyers can come in at. But like these guys will buy 6.25 to add to 4 more they already have in DFW because then it gives them the scale to actually go get that 5, sub 5 exit.
Yeah.
So I just say that's some real-time data from actually like underwriting for clients. Like, hey, if it's small like that, like brand new 5-year lease, I'd say 6 months ago was 6.75.
Yeah.
And I'm seeing them trend down because these groups really want income.
Wild.
Yeah.
Even though interest rates or whatever they are, like that's a small enough check to buy unlevered, but it's big enough to get enough scale to spread them out.
Yeah.
We're like, oh, this rent's below market, so I'll put more over here, and this one's above market, I'll put more over here. And there's probably, I could name, maybe not that low of going in, they'll probably bitch at me and say 6.5. But like, if a broker does his job to go get it, like there's probably 8 or 10 people that I know that would probably, if they're good assets, like they would jump on that, And so the last trend I'd say is, electrical companies, all the data centers and all the infrastructure stuff that's going on.
So that's kind of an emerging tenant that has a big need.
Yeah. I mean, if it's like Ansco Utilities, we're talking about them, or, like storing inventory, like everyone complains about development, about the backlog of transformers and, equipment. I was like, oh, that's 15 months. And so the solution to that is they're paying groups like MEI Rigging to store these, and they'll pay. It's like a moving company, right? Yeah. They don't make money moving your stuff. They make money storing your stuff in their warehouse for $5,000 a day or whatever, a month. And so, trucking's tough, just in terms of like, you really want to understand how to lease a drop lot.
Yeah.
Go interview 3PLs and trucking companies and understand like how the supply chain works and how to move it. Because it's a tough world. There's more small building on 5 acres. That's the bread and butter. But at the same time, you cut down on vacancy if you were actually very interested in working like the leads the way they need to go.
Yeah.
But
that's very interesting how you feel your drop lot. Very creative. Very Summit Hogish.
Yeah.
Who do you think gave me the 3PLs? You know what I mean?
No, I mean, but that's a guy who like you
or Ward.
They're like, I need to understand what's going on here because no one's really done a deep dive, and you've just peeled all the layers of the onion off to really get to the core. But that's how you do it. Now I understand how to get all the way here.
Yeah, and it's when you're on a leasing call every week. It's like you have to keep repeating back. It's like finally, no, I want to figure this thing out.
Yeah.
But nah, man, mad love for you boys. I appreciate you having me on.
Yeah, this is good. Some good stuff, especially
it's good timing. Yeah,
the NAIOS deal.
It's gonna be great. Justin Horowitz, Cooper Horowitz is moderating like the main panel with Steve Azar, Ambient, the main guy at Peakstone. Apologize, I don't remember his name. Timothy McCahill at Transport Properties, who just took the $1 billion from Blackstone.
Yeah,
the guy that at Catalyst, Dan Heron.
Yeah,
right. They just did a recap, pretty large one. Over in the Southeast. And so you talk about market makers, and like those guys are the right guys. Like Tom Barbera and IOV, they know everybody. They're such good people in the way they conduct business. They have the relationships. So that one is kind of the C-suites panel. And then my panel is actually called From the C-suites to the Streets.
Nice.
So, it's a bunch of brokers. So we're going to try to put as much energy and effort into answering questions that people want to know, and it's going to be fun. Like I said, a lot of people are going to be there, and thanks for letting me come get warmed up. And hopefully the information we talked about will help us rip those 3 or 4 hell yeah deals a year.
Yeah, let's go. Well, D. Guinn, everyone, thanks for coming on, man. That was fun.
Thank you, sir. Stay hard.
Stay hard.